Hey traders, it's John Fortune here, this week's Weekly Forex Forecast for the 27th of April to the 1st of May 2020. As always, we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. I'm also going to be highlighting some of the targets that we're going to be looking for in the coming week and also for the weeks ahead. So I hope you're having a nice weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, we always look at the US dollar index at the start of the video because this gives us a guide, it gives us an idea, a compass, if you like, towards the dollar pairs as to the strength of the US dollar itself. Is the US dollar strong? Is the US dollar weak? Is the US dollar neutral? Now, you can see here we do not have any clearly defined trend in the dollar index. We had this big rally to the upside and we discussed the fact we're in this corrective mode last week. Because of this large standard deviation move to the upside, we're going through a period of consolidation or price acceptance before we start to break out one way or the other. As a result, you can see we're actually failing still in the dollar index. In yet another week, we're failing to make either new highs or new lows. In the larger picture, this is a higher low from our previous low. We then put in a lower high, a higher low and a lower high, and this has given us this coiling pattern in the US dollar index. So to cut a long story short, going into next week, we are going to have a neutral bias still on the dollar index as we're still in this corrective phase. And this means that we can expect some currencies to be stronger than the dollar next week and some currencies to even be weaker than the dollar next week. So we're going to go into next week with a neutral bias on the US dollar, and we're going to be trading therefore the currency pairs on their own merit, that is the way they are currently structured, without a strong bias in the dollar one way or the other. So the next market we're going to look at is crude oil. Now last week we had a historic week in the crude oil markets, in the WTI market to be specific, and this was because we had the May futures contract trading negatively down to about $37 a barrel, as most of you I'm sure have heard. Now there is a difference between the spot price and the futures price, and the best way to think about this for anybody who's not sure is if, for example, you wanted to purchase a new refrigerator for your kitchen, if you had already cleared away the old refrigerator and you went into the shop, you could pay the spot price, the on the spot price you're paying now, and you're taking delivery straight away, and you're taking it home and you install it into your kitchen because you've got the space to do it because the old one's been taken away. If, for example, though, you could not remove the refrigerator in your kitchen, so you knew that that was going to be taken away by a company and taken to the rubbish or whatever, or you had a seller who was going to come around and collect it, but you knew that was going to happen in 3 or 4 weeks time, you could go into the shop and you could pay for your new refrigerator, but you would say to them, I don't want delivery of it straight away because I've got nowhere to store it because the old one's still there. Once this is taken away, you know, if you can deliver this to me in a month's time, that would be great. That's the difference between the spot price and the futures price. And essentially what we saw last week was buyers of oil, especially the large corporations, they didn't want to buy the oil futures contract because they already had storage capacity to the maximum. So in using the analogy we just used, essentially their refrigerator was still in the kitchen, so they refused to buy the new one because they said, look, even in a month's time we're not going to be able to get rid of the old one, so there's no demand now for new refrigerators because the old one's still in the kitchen, we can't get rid of it. So as a result, this saw the oil prices collapse and even go negative as we saw oil basically become a liability. The fact that this is in the futures market, though, there are some technicals to this as well, but it still shows overall, it is still important because it shows the huge lack of demand for crude oil currently because of the ongoing, the double shock actually of, from the supply side, the OPEC disagreement, and also from the demand side, the coronavirus effect. So we are still looking for further declines going into this week after that sell-off last week. Any pullback in crude oil, and especially as always if we can come back and retest broken support, turning resistance at the 19.29. This would be a great place to start to look for bearish setups in crude oil, and we're going to be looking at initiating shorts down towards the next key area of support to the downside, the target set at the 9.37. Now, just one word of advice: if you are new to trading and you have on your brokerage account, you can only trade the futures markets, it wouldn't be a terrible idea just to avoid crude oil for the time being. Come back to it when it starts to become less volatile, because crude oil volatility, if you go and look at the OVX, is still very, very high. So it's quite a risky asset going into next week. If you want to just leave this altogether, especially if you can only trade the futures contracts, there's nothing wrong with that. So the next market we're going to look at is euro dollar. Now last week we were looking further declines to the downside in this market, and we did get a move to the downside. We are still looking for further declines going into this week, and we are only focused on bearish setups in this market. Any pullback in this area, and we would like to get a pullback to give us better risk to reward setups to the downside, but any pullback in this area is going to be viewed as an opportunity to start to look for bearish setups. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 1.0700. So the next market we're going to look at is pound dollar. Now last week we highlighted the 1.22530 as an area to look for a pullback and a potential bounce to the upside in pound dollar. We did pull back and we test this level almost to the pip before a small bounce to the upside. Going into next week, we are still looking for further advances in this market as it is still overall structured to the upside in terms of the pound against the dollar. Any pullback in this area once again, and preferably another retest for anybody not already looking to be involved from last week at the 1.22530. This would give us the opportunity once again to start to look for bullish setups in pound dollar. And we're going to be looking at initiating longs if we can get the right kind of reversal patterns in this area. And don't forget, it's important to look for reversal patterns in this area. We don't just buy or sell these levels, we look for tradable setups in these areas. So if we get that tradable setup, we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 1.2524. So next market we're going to look at is US dollar Japanese yen. Now the US dollar Japanese yen pretty much hasn't gone anywhere since the 15th. Over here you can see we've just been coiling in this kind of wedge shaped pattern. The opportunities have been actually non-existent in this market. There's been no opportunities to trade US dollar yen because it hasn't moved. We would still be focused and we would still prefer to look for bearish setups in this market as it is still overall in a downtrend. What we'd like to see really going into next week, if we can break out of here, and we'd like to see a nice break to the downside, not just a wick like we saw last week, but a nice break to the downside would give us the opportunity to start to look for bearish setups in this market. And if we get this kind of nice setup in this market, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 105.86. So next market we're going to look at is Aussie dollar. Now last week we were looking further advances to the upside and we did finish the week up near the 0.6400. Very simply put, going into this week we are still structured to the upside in Aussie dollar and we are still focused primarily on bullish setups. What we would like to see is if we can get a pullback and if we can come back and retest broken resistance from the past, turning support at 0.6287. This is going to be a great place to start to look for bullish setups, very similar to what we just looked at in the US dollar yen. We'd be looking for a breakout to the upside in Aussie dollar. And if we get this correction and breakout, we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 0.6461. So the next market we're going to look at is New Zealand dollar. Now, New Zealand dollar is structured to the downside, this being a function of the fact that the New Zealand dollar is currently weaker than the Aussie dollar. This is why the Aussie US dollar is structured to the upside and the New Zealand US dollar is to the downside. You'll go and see Aussie New Zealand is actually to the upside if you look at the Aussie New Zealand pair. So going into next week, we are looking for further declines as the higher probability. We are focused primarily on sell setups in this market. We've already started to pull back towards broken support from the past, looking to turn resistance at 0.6065. So any continued pullback is going to be viewed as an opportunity to start to look for bearish setups. And if we get the right kind of bearish setups in this market, again, you can just take very simple, we're looking for this retracement and a breakout to the downside. We're going to be looking at initiating shorts down towards the next key of support to the downside of the target set at the 0.5882. So the next market we're going to look at is US dollar Swiss franc. Now last week we were looking further advances to the upside and there was a nice move to the upside. This was one of the better pairs to trade last week. Going into this week we are still looking further advances to the upside and we are still focused primarily on long positions in US dollar Swiss franc. What we would like to see is if we can get a continued pullback. Any pullback in this area, preferably as always, although it looks unlikely next week, it's going to come all the way down to the 96310. So any pullback in this area is going to be viewed as an opportunity to look for bullish setups, look for that breakout to the upside. And if we get the right kind of bullish setups in this market, like we've been discussing in this video, we're going to be looking at initiating longs up towards the next key of resistance, the upside and target set at a 0.9820. So next market we're going to look at is US dollar CAD. Now US dollar CAD, although we've seen this crash to the downside in oil prices, it is currently structured to the downside, showing that there is really a lack of strength in the dollar, at least for the time being in the near term. And last week we highlighted the 1.41810 to look for a potential bounce to the downside. We did bounce at this level. So very simply put, going into next week, we are still focused primarily, as long as we're structured to the downside near term, on short positions in this market. You can see there's a number of solid lines in some of these charts. This is because the targets that we have down here, the major areas of support and resistance, because of the big move we had in the dollar, they are quite far away and they're not likely to be hit next week. So these are more intermediate targets to be achieved next week if you're looking for a near-term profit target. So any pullback in this area is going to be viewed as an opportunity to look for short positions. In this case, we'd be looking for this potential head and shoulders to the downside just in the near term. If we can get a pullback and we start to break to the downside, this is going to be a good opportunity to potentially start to look for shorts in this market. And we're going to be looking at initiating shorts down towards the next key of support to the downside and target set at the 1.3926. And last but not least, we have gold. Now, last week we were looking for further advances to the upside, and we did get a nice breakout to the upside in gold last week, and we started to make our way towards the target set at the 1763.05. So very simply put, now going into next week, for anybody not already involved in gold, any pullback in this area is going to be viewed once again start to look for an opportunity for bullish setups. And if we get the right kind of bullish setups in gold, we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set from last week, the 1763.05. And if we can get a break through here, we're going to be looking up towards the next key of resistance, the upside and target 2 at the 1797.40. So that is it from me for this week, guys. Before I go, I want to point out something important coming out next week. We do have US GDP data coming out at 1:30 p.m. on April the 29th, which is next Wednesday. And that's 1:30 p.m. UK time in the afternoon. This is going to be a terrible number because of the recent economic shutdowns we've seen. And we also have a press conference on the April 29th, same day, at the latest time of 7 o'clock UK time, so 7 p.m. UK time. And when this piece of data comes out, although it's not going to be unexpected that we're going to see a bad number, the markets can and are likely to get very, very volatile. So you need to bear that in mind if you're trading. If you start trading around these kind of data releases and you're trading with very tight stop losses, you can actually incur pretty severe losses because your stop losses won't always get honored. And it won't be your broker. That's just what happens in a fast market. You cannot trade around pieces of data like that with tight stop losses. You will get stopped out, and you get stopped out at a worse price than your stop loss. You'll end up losing more than your stop losses. So just bear that in mind when you're trading next week. When these pieces of data come out, you need to be aware of this and the potential volatility that could come into the market. So that's April the 29th, which is Wednesday, 1:30 p.m. We have the GDP data out of the US. 7 o'clock in the afternoon UK time, we have the press conference from the Fed. So with that said, guys, I want to wish you all the best for next week. I want to say a big thank you to everybody who has subscribed to the channel and who comments on the channel on a regular basis as well. I want to wish you all a nice weekend. And again, take care trading next week. Bear in mind that piece of data coming out of the US on Wednesday. The only thing left to say after that is take care and don't forget to trade safely.